Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a breakdown of the action in today's session, where we saw a wild day after the Fed hiked interest rates again. That was expected, but the reaction was unknown. And at least as of the close, Ken, it was not a positive one.
Not a positive close. Yeah, the Nasdaq Composite was up 1.3% intraday after the Fed raised interest rates by a quarter point, but it ended up being a pretty sharp reversal for the broad market. So we found three stocks to talk about. Nonetheless, take a look at two large cap techs that continue to perform well here: Microsoft and Lam Research, MSFT, and LRCX, and also want to take a look at Meritage Homes, MTH, in the home builder group.
Great. We'll take a look at those stocks, but first let's analyze the major indexes. Here's a look at the Nasdaq Composite, which, as you mentioned, a sharp reversal lower, down 1.6% at session's close after hitting that round number at 12,000. And this chart doesn't even show the full picture. It's slightly delayed here. We can take a look at QQQ to see that reversal, which the Nasdaq 100 got to its highest levels in a number of months here, Ken, clearing its early February high before reversing lower on this digestion of the Fed rate hike. So we didn't get a follow-through day today.
No, we didn't, and we just got a reminder that the market is still in a correction here, and that major stock indexes are facing some key technical levels. So you don't have to be an expert in technical analysis to see, just looking at the S&P 500, it's still trying to, move above that 50-day moving average, which is just above the 4,000 level. Pretty sharp reversal. And so these are just technical challenges that the market is facing here. If we go back to the Qs, the same situation where the Qs really tried to break out of this little sideways pattern. It closed near its low, and same for the composite, which tried to briefly poked above the 12,000 level and turned tail pretty quickly. So again, just a reminder that we're in a correction. We were really ready to expect anything from the Fed, and who knows, we could be up sharply tomorrow. So we're still fairly lightly invested in the leaderboard model portfolio. So still a challenging market out there.
Mm-hmm. And that's a great point, Ken. We don't know what tomorrow will bring, because sometimes you can have a counter reaction to the initial reaction. Sometimes it's a follow up, of course, of that trend. But it seems like for those who now want to bet on further weakness, there's risks with doing that too at this stage, just given the heightened volatility we've seen in the market as of late.
Yeah, I mean, at this point, we're really just looking for renewed signs of accumulation in the stock indexes. So if we start to see some, higher volume gains and lower volume declines, at least signs that some institutional money is starting to come in from the sidelines, we'll feel a little better about the prospects for gains here. But that is, clearly not happening after today. And again, there was some volume picked up the pace on the Nasdaq, and so it did appear to be a day of institutional selling. It's really hard to also tell like what fueled the selling, because a lot of people were talking about a fairly dovish start to the Fed statement. But again, inflation is more than double where the Fed wants it to be, and Fed Chairman Jay Powell acknowledged that they are still fighting inflation and it's still way too high. So the market probably, focused on that, and still a lot of uncertainty in the financial sector
Right.
with the collapse of SVB Financial and Signature Bank. So Powell assured the markets that the banking system as a whole is sound, but that still brought sellers out into the market today.
That it did. Let's also take a quick look at the Dow and the Russell 2000. So the Dow coming off of its highest levels too, with a big downside reversal back below the 200-day line. And IWM, which tracks the Russell 2000, it's been weak. It's been having bigger swings as of late. Like I think it outperformed yesterday, but down solidly today. And now let's take a look at the 10-year Treasury yield. Here's your TNX. So a wild day here too, but came off a little bit, Ken. So how do we interpret what we're seeing with the yields?
Well, just I mean, you can just see a sharp reversal for yields. Now, what the market knows is that the Fed is getting pretty close to, or pretty much at the end of their rate hikes. We're thinking there's going to probably be one more quarter point hike before the Fed pauses. That seems to be a pretty good shot. Again, it's fluid, but that's what the market's expecting right now. So, it's not surprising to see yields fall here. I thought that the action in the dollar today was very very interesting. So I wanted to
Hmm.
look at UUP, which closed off lows, but did have a sharp break of its 50-day moving average. So normally the market is going to rally when the dollar is weak, and gold tends to do pretty well when the dollar is weak. And we also want to take a look at GLD, which is in a nice technical setup here. You can see that weak dollar fueled a nice gain for GLD today, and this is sitting right at an entry point here. So there are some opportunities out there, but if you're going to go long gold here, you've got to be bearish on the U.S. dollar, which may not be a bad place to be right now.
Yeah. All right. Well, let's take a look at some individual names. Here's Microsoft, down on the day, but holding up. Recently broke out, had a really strong week last week. And we are still seeing it hold near its highest levels since late January, early February. But we saw a quote unquote flock to safety to the mega cap techs. But where does that leave us now with the updated rate hike picture?
Well, at least with Microsoft, there wasn't a whole lot of volume behind the selling today, so that's a positive. This chart looked a lot better, 20 minutes before the market closed. It was still holding on to a
Yeah.
nice gain, but you can see it really got pulled down with the market. So this story of large cap tech leadership may not be over. It was a discouraging day for the Nasdaq and the Nasdaq 100, no doubt about it. I mean, it did have the feel of distribution. So maybe that narrative is going to change, but still looking at names like Microsoft, there wasn't a whole lot of volume to the downside today, and you can see how that stock came up off lows with some really good volume. So
Right.
this technical picture is still intact, and obviously Microsoft, one of the bellwethers in tech, with a great CEO and great cloud business, and so one to still watch here.
Yeah, a bellwether, no doubt. Let's take a look at LRCX in the semi equipment area. It had a nice day of strength on the 16th of March as it moved off of those moving averages, over 5% gain on the day. And it's been going pretty much sideways since, not a whole lot of damage today as we saw stocks come under pressure later on in the session. So, a pretty compelling base that this chip stock is forming.
Yeah, and still holding support at its 50-day moving average. You can see it reversed lower with the market, and volume picked up the pace a little bit, froze from Tuesday, but still below average here. So again, a chart that is still intact here. If we swing over to the weekly chart, you can see this base, forming and trading tightly, pretty close to the 10-week moving average. So got a good, healthy relative strength line. So this is a stock that still could work. It's going to need again, it just kind of renewed. So we're going to need to get out of a correction first because the market is still in a
Right.
correction. So once we start to see some of the signs that we're looking for, just renewed signs of institutional buying, it could happen soon. It could take a while, but this is the type of setup that could work if the market can right itself here.
Yeah, and we've been noting strength in home builders as of late. So we've got MTH here working on an up week, a handle that could honestly be called its own, either flat base or consolidation at this point, Ken. But support at those moving averages. And this is a stock that was up on the day.
Yeah, it's another good, got good fundamentals here. Again, I've been talking about this home builder trade as being very, very counterintuitive. I think the home builders do have a lower interest rate environment working in their favor. We're going to get new home sales data tomorrow, so the builders could move on that, depending on what the data shows tomorrow. But similar to LRCX here, this is a stock that is holding support where it should, and you see that big volume down day that was last Friday, and that was when options expired. But the stock barely budged here. So this is another stock that's got that good mix of fundamentals and technicals, and still thinking that the home builders, could be a pocket of leadership here, especially if the Fed is getting very close to the end of their rate hikes.
Right. Looking pretty interesting here. But Ken, at the end of the day, in order for these stocks to work, we need the market to cooperate. So let's circle back on the market. What is the plan of action right now for traders? It seems like for starters, we got to take things one day at a time and remain patient because, like you said, at one point we had the Nasdaq and QQQ up nicely today, but with the volatility and reaction to the Fed rate hike and Jerome Powell's press conference, patience is definitely still warranted at this time.
Yeah, I mean, it's just it's really about, again, today was a bearish session, no two ways about it. And again, headed into today, we had the market in a correction, which means our exposure in the leaderboard model portfolio is very limited. I think we're 33% invested at this point. So the market does a good job when it starts getting healthy again. And again, you see these subtle signs that institutional money is coming in from the sidelines. That tends to make a lot of your growth screens populate with more prospects, and you get more setup. So right now, even with the market up sharply yesterday, we just didn't see any volume behind that up day. So just not seeing the kind of renewed signs of accumulation that we're looking for. And again, that could take some time to play out. There's certainly a lot of uncertainty out there still in the financial sector, still a lot of day-to-day volatility, big gains, big losses among a lot of these regional banks. So uncertainty still out there. So we're still generally watching from the sidelines, but just watching for clues from the market that it's getting healthier, and not seeing it yet. But we're holding out hope that we could a tradable rally here at least could work. But tough day today. We'll see what tomorrow
Mhm.
brings.
Absolutely. All right, Ken. Well, thank you so much for your insights and thanks to everyone for tuning in. We will be back tomorrow starting in the morning with IEBD Live, investors.com/IEBD Live for all the details on that. We'll see you there. We'll also see you right back here tomorrow at the close.